Good afternoon. This is Ken Long from Tortoise Capital with a review of the weekend trading reports for February 1st, 2014 Super Bowl edition. Go Broncos. Just want to point out we've opened up the new website at tortoisecapital.net. It's redesigned, has links to webinars for sign up, and then a lot of sample trading videos and good information. Market is in bullish volatile condition. On an annual basis, using weekly RSI 14, it's at 57 out of 100, or a high end of neutral. On a 10-day basis, short term, using the 10-day NDX, it's oversold at 16 out of 100. Price relative to the 200-day moving average is red bullish at 5.14%, meaning of just over 3% cushion between price and sideways markets. Slope of the 50-day moving average is basically flat at 0.01%, or red bearish. ADX is showing a strong bearish trend at 26.4. ATR percentage went above 1 at 1.11%, putting us into the volatile condition. The risk index is the 30-period moving average of the VIX divided by the 10-period. Anything less than 1 is risk off, meaning that riskier assets are not favored. That reading currently is at 0.87, so we're in risk off. If you take that score of 0.87, compare it to the last 5,000 trading days, and find the standard deviation, and call it normal between 1 and -1, see that our current risk z-score is at -1.68. This is the 90-day time series. That indicator shows that we are reaching extreme conditions of riskiness as measured by the VIX risk index. When it has turned at these critical states in the past, that has set up excellent swing trade opportunities in XIV, just as these have been excellent swing trade and intraday opportunities inside VXX when it rolls over and moves south. Blended monthly rebalancing happened this week on 31 January, so the next reevaluation is due on or about 1 March. These are the top 3 candidates for the ETF 13, 22, and 32, still dominated by U.S. tech and healthcare. These are the current leaders in these different portfolio populations. So right now, natural gas, biotechnology are dominating. In ETF 2, the theoretical exposure is at 40%. The model portfolio remains at 100%. A little over half of the ETFs in the blended monthly portfolios for 13 and 32 are on cash signals. Only the U.S. really is in the favorable condition. Treasuries are starting to show strength, coming back up to 1.08 or 100 day. ETF Max is the 1,300 ETFs in the expanded database, and these are the top 50 as measured by the BMR methodology. The ones that are green on the 3-month return and then white on the 6-month return are ones that are early to the relative strength outperformance, such as the GSTI networking and more natural gas. The ones that are white than green are starting to show weakness, like PGJ, the Golden Dragons, and the gaming ETF. Excuse me. Market health check. We remain at the bottom of the floodplain at the very critical state of 177. If 177 doesn't hold, which is at the southern edge of the 30-period regression channel and the 90-period regression channel, with the 10 slipping down sharply, then the next stop is probably the 200-day moving average with a hold over here at 174, 172. Vertical blue lines represent 10, 20, 30 days worth of look back. The horizontal red lines are support levels that have been resistance levels in the past and which, if violated on the downside, become targets for retracement trades. Red shaded area is the 200 period moving average. This dashed zero line here is related to the 30 period regression line slope, which is this sine wave looking, and you can see that that slope has turned negative about 3 days ago and is on its way down. If it gets below minus 0.22, then we have an extreme steep downward reading compared to historical measures. The 30 period Bollinger Band plus or minus 1 is the dark blue shaded area, that's the river. The floodplain is that same Bollinger Band plus or minus 2, the floodplain. You can see right now that we were hovering at the edge of that floodplain. The outer channel of red lines is the plus or minus 3, that's the real boundary of extreme. ADX is up to 26 now. You can see a bearish definitely a charge. We're starting to be oversold on a more regular basis. The percent price oscillator, which does a pretty good job of finding intermediate trend turning points, still pointing down. Jaws are still open, but starting to diminish a little bit as we move from this period of vigorous selling to this sideways choppiness with some obvious buying pressure as it tried to put in a support level. So the gap down there in PPO starting to close. The ETF2 regional report, 4 out of the 10 regions are on buy signals, so we're at 40% invested, 60% cash in the theoretical model, down from 50-50. The S&P at 53, still better than the rest of the world at 49. Inside the U.S., it's technology at 58, and small caps at 55. Large caps 53, mid caps, at 53. Two strongest sectors are technology and U.S. small caps. Two weakest, Latin America and Asia less Japan, as has been the case for about 6 months. The U.S. sector spiders, only healthcare are really showing any kind of strength right now. World market model, U.S. remains above average, technology is exceptionally so. China and Vietnam, the only strength whatsoever in Asia. Latin America, emerging markets, Canada, Mexico, Brazil, all under the database average. For the most part, Europe still above average with real strength in Spain, but Netherlands and France starting to get weak. And now you can see Europe starting to lag the U.S. since Europe is yellow. The alternate asset classes are starting to get a little bit better. These have been red for 5 or 6 months. They're starting to look a little better. In the battle between the U.S. business sectors and the globals, a slight hat tip to the U.S., staples, utilities, and healthcare especially. The top leaders in the ETF 30 database. These are the top 30 ETFs, I should say, out of the ownables from ETF 2. Leaders continue to lead. Vietnam is an early strength leader here now. It's starting to move to the top, being that it's green and white. Home construction and the technology, Alphadex, also green and white. Healthcare, lots of healthcare. Greece continuing to suffer, being white and green, as is the dynamic media. This white and yellow should be of interest to us. That's the mortgage real estate investment trust. So as there's starting to be some weakness now in the equities, maybe this is time for real estate to start moving back up. We saw some of that in the world market model too. When we look at real estate had been red, is now moving up into yellow. These are the Dow 30 symbols. using the ETF2 methodology. Emerging leaders, Merck, Caterpillar, and Microsoft. Microsoft been remarkably resilient here. Part of the strength in tech coming from there. One to keep an eye on. Boeing has now moved down to the middle of the pack. It's weak. As are Travelers, Johnson & Johnson, and Procter & Gamble. ETF liquidity for reference. Shifting to the daily report now. Looking at the daily report, again, reports 2 through 5 are the primaries. Many signals among the overreaction and channeling. We have a triple screen and a 551W here in Visa and Cisco. And a number of auto framers that test out well. They're better than 2 to 1. You can see the sharp rise in volatility here. That's been good for VXX. And the winners and losers compared to the 10-day look-back period. Microsoft, Caterpillar, Verizon been the clear winners here. Losers, Boeing, American Express, Visa, Intel, Goldman. This being short, Brazil has been a winning trade for 6 months. Continued weakness in South America makes EWZ and ILF attractive. In the tactical summary, a ton of candidates that test out well. That's what you would expect after this sharp sell-off last week. A bunch of channeling and overreactions. Here's your triple screen and 551W. You got 4 that signal on the RSI2 value. Procter & Gamble, Chevron, ExxonMobil, and Boeing. Real strength down here in among these price changes. This is where the winners have been. And even on Friday, you had Microsoft making a 10-day and 1-month breakout from previous highs, as did Caterpillar. So lots of targets to choose from. ETFs, again, a bunch of channeling and overreactions. Dojis and treasuries and oil. VIX was the big winner. XIV the big loser on Friday. You have Japan, number 4 in your max pain range compression, tests out at 4.3 to 1, and an RSI2 value of 6. Lots of auto framer candidates for you to consider. I like this trade in Brazil and Latin America. The 30-period regression line you can see is sloping downward. The polynomial has accelerated to the downside. You can see in the time series here over the last 30 days that slope is now under the zero line. Sold off almost 2 standard deviations from when it crossed over about 10 days now. We're approaching historically steep levels compared to the last 180 days. And the percent stretch relative to the 200, this is as close as we've been in the last 6 months. And that was followed by a reversal. But as the bull gets older, it gets harder and harder to keep doing it. You can see on a historical basis, we're starting to approach significant support levels or warning levels when you look at the last 10 years. Just for perspective. So the real pain hasn't been seen yet, but that's the first warning sign. And again, you can see the sharp move in volatility. The rest of the charts are for reference. You can just see how Microsoft is really standing out along with treasuries here. Looking at the slopes and the z-scores of the slopes of regression lines, the 10 fell out more than 2 standard deviations below. That's how sharp this has been, that sharp sell-off there. Compare that move to previous pullbacks, you can see it's been much more violent. The last time it was even close to that violent, we had this, followed by a sharp rebound. That was a major turnaround. This one could be. This could be the reversion to the even longer term mean, however. The 30 has pulled down and is getting close to the critical state at the bottom of the normal channel. The 90 has rolled over and has come back to the channel. Again, this is a natural place to support a significant move up or down from these compressed ranges. Frogs, holding periods, and gap statistics. That's everything from Tortoise Capital. Keep your powder dry and your risk measured. Go Broncos.